All right, good evening. So I'm recording this video now. This is 11:37 p.m. Nigerian local time. So I am recording this video for the market delivery for Thursday, 16th of March of May, sorry, 16th of May 2024. So um we can both see what you're seeing now is DXY, all right? So I'm talking from DXY before we go to the euro. So what what you can see in DXY right now is the price delivery for the month of May. Since we open from the month of May 2024, price has been going lower indecisively. That means price has been moving lower very fast and what seeking sell side delivery. That is, price has been going towards a specific direction, although there is a retracement or an up close candle, but it's moving towards a specific what area in price. Over time, if you look back, uh, we all know that this was a bullish order block. That is, if you are following up with my video, and if this is the first time you are coming across this YouTube channel or this you are coming across this page, please like this video, you know, subscribe to my channel and also give me a follow. All right, and that would definitely encourage me a lot. Thank you and God bless you. Now, I want to explain. This video might take me longer time than usual. Normally, I like using 20 to 25 minutes for my daily videos because I don't want to bore my viewers with speech. But for my own sake, and for my own reference sake, because I'll be referencing back to this video for my own self. All right, because this is an information that I need to keep for my own self. Sometimes I go back to watch my videos and get ideas from it. It's still my videos, still my thing. I did it for myself, but I still went back to get idea from it, and that's how this whole process works. Now, I want to say something, a word that is very, very simple but critical to understand by a layman. Learning, classroom is, sorry, let me open my book for that because I wrote it down. The statement is classroom is not required when learning is desired. And this, make a whole lot of sense to me, especially when I integrate it with trading. Now, sometimes I complain that I don't have data, and that's why I'm not doing these videos. Although if I'm not doing videos, I'm supposed to be studying by my own self. Someone will say, if you don't have data, how would you study? I have content I have done, like my own videos. I can watch it without data because it's automatically saved on my laptop and I name it according to the day I did it. So that in itself is telling me I'm going to be able to pick out the mistakes and bring back, so that I will enhance more on my future videos. This might not really make sense to you, but when you stick and you try to think it with your own life or with you in your own ways of life, it might actually, at the end of the day, make sense. Now, since the market opened for May contract 2024, we haven't seen any bullishness in price, and price keep coming lower. Earlier, I was telling you guys that we are looking forward to a weekly bullish order block, which is at this price. There is a bullish, yeah, if you go on the weekly time frame, the opening of that weekly bullish order block is at this price, which is the area I call out for you guys, especially if you check on my weekly videos that I did, the past one, immediately after that video that follow. So if you check, you will see that I make reference to that bullish order block. Now, price has eventually delivered lower inside the bullish order block on the daily time frame, right? And close inside the bullish order block, which makes it weaker to me. It makes it weak for me to want to make use of it because of how we deliver into it. It was so impulsive and once, especially from Wednesday, which is the CPI data that move price drastically into that areas of interest. Now, fine. We see that the previous month low, which is this sell side liquidity. I want to expand this thing because most of the thing we need to talk about is within this specific range. And since my videos don't, the chart does not show very well, that's why I'm expanding it. I just want us to look towards this area alone, right? Which is the previous month and the current month. But that's kind of good and great. I don't because I don't and also I don't want to talk about seasonal tendency. And again, this is my first month studying the month of my first time studying the month of May vividly and trying to rethink it with what my back testing I have done for May 2019 and May 2021. So it is uh I might not be that perfect with it, but I sometimes I don't even make use of the seasonal tendency. I just trade without a bias. All right, I might have a session where I will talk a live session maybe this weekend if live is there. I might have a live session where I teach how to trade without a bias using what as inner cycle strategy, right? Using the inner cycle strategy or the smart money concept, which is the same thing, but people just decided to name it differently. So we have a low and a high. Now, this high failed to be taken out. So fail a little bit because this high is at 1.06.169 and this high is 106.166. So just by how many ticks? By 66 by 3 ticks. So this is different from this by 3 ticks. And now price begins to go lower. If actually we sweep this liquidity here, I might so much trust that we are going for this low. And now that we are trading currently at this price, does not also mean that we might not come towards this low, but I still support a slight bullish move in price that is towards the towards the buy side liquidity since we have already have a large range there. And after when we have a large range day like this, it is followed by what? A small range days. So this price move pricing lower, this move in price is delivering us to what? A discount price if you check this range. All right, if you take this as the range, Now, why will I call that a range? We swept a sell side and also swept a buy side that delivered higher. So that's why I call it a range. A range in price uh is is a new price movement that is formed after a buy side and a sell side liquidity has been swept, or after an old high or old low has been swept, which leads to a new range formation. And now, since we have derived lower, which is intendedly telling us that price is trading at the discount price, and this also form a smart money divergence with the euro contract. So I'll be going to the euro contract shortly to so that you will see that the euro contract has already formed a higher high, which is we have swept the previous month high, but we failed to sweep the previous month low for the XY. And if that's the case, we might not take out this previous month low and price will continue going higher. Or we might eventually see that that previous month low is taken. All right, but let's stick to the buyers we have for now. And tomorrow is Friday. I'm going to tell you what to look out for tomorrow at the end of this video. If you want to trade tomorrow, and please, this is not an advice for you to go into the chart and try to trade what you don't understand. I am only here sharing my opinion on price, right? So it is not an avenue for you to go and engage with because I said this is how I'm going to do with price if price did this. I'm only sharing my opinion. All right. And if you want to have a private tutor with me, you can even comment on this YouTube channel or whatever social media I post this, because I normally post it across my Instagram, uh, my TikTok, YouTube, and other social media that I have, and Facebook. So in any of them you find this video, you can give me a comment and I'll DM you. I'll show you how you can reach me, and I'll take my time to teach you if you are willing to learn. That's why I first say that not uh that's why I first say that statement which I said earlier, that classroom is not required when learning is desired. You can go any extent to learn as long as you are determined to learn. So this is Euro US dollar daily contract. The daily contract for May 16, 2024. And on the XY, previous month has been taken, which is previous month high. If you look at the if you look at the XY, we have seen that price uh did not sweep the previous month high, but a little bit. And if you see that there's a divergence between this price and that the XY, all right. And now same thing has happened in an opposite format. All right, so that in itself is telling us that if this should be the case, the price for euro might continue to come lower and will begin to seek the sell side liquidity, and the XY will continue to seek buy side liquidity. But I have a statement written here, like I normally do. I normally write everything down about what I see in chart and what I'm expecting. So I will read that and explain. The Euro US dollar daily contract for Thursday 16th May 2024 deliver as a down close candle. Now I am concentrating your focus on a particular candle. This is how I journal. My first statement is about that particular day candle. How did it deliver? Now, as a down close candle that sweep previous day high, eventually this today price delivery sweep what previous day high and also previous month high. You can see that this price delivery is the one that sweep this previous month high, although the tick there is a little tick higher above the previous month high on Wednesday, but this Thursday price is the one that confirmed uh, that buy side liquidity purge, and market trade lower after sweeping the buy side liquidity, trade lower into the previous day pricing range. Now we trade back into the range. Now, my second statement. I am very pleased, right, to see you rally higher and sweep the previous month high. And if this is a run on liquidity, we can now look forward to a price rally lower towards the previous month low. Just like I have said that if this is a run on liquidity, we can expect now for price to keep going lower, even though it is not on a run on liquidity and we are not totally going to come here. It is also a sign in price that we will come towards what the 50%. That means if you measure this range, this buy side and this sell side, the 50% region will be the area where we should look at for price to retrace into. Then we can look for a PDRA that suits that price action. Then we engage from there. Now, the third statement, looking forward in price. Now, I'm telling you what I am looking like, what I'm anticipating. Now, when I mean by I'm anticipating for something, that is look what I'm expecting to happen. But that does not mean it must happen as I have said, but it happens more often than not. So, looking forward in price, I am anticipating for a price rally lower and seeking was sell side delivery since we just traded above a major buy side and relatively showing a weakness in price to trade lower. Seeing that we have an imbalance form in today's price, we might eventually trade consequent encroachment of into the consequent encroachment and price back into the range. Now, well, I think I need to apply something to explain that consequent encroachment I am referring to, right? So you understand. Now, this is what I'm referring to. I'm going to expand this and only show this candle. Now, today price delivered leading to a formation of what a fair value gap. Now, although we might be looking for a total bearishness in price, but also we can have that in mind that price might trade into the consequent encroachment of this fair value gap and what remain above that range before next week, since it is Friday and we are not expecting a large range day, since it is not a non-farm payroll day, because the only news that eventually happened, that is a high impact news that happened on Friday, is the non-farm payroll that happen every first Friday of every month. So since that's not the case for us tomorrow, we might look for a price run in towards this consequent encroachment, which is a good area and which will also give us a good amount of pips, and which would also take a specific liquidity in price, which is the previous day low, as that is an area of liquidity as well. Now, the draw, my last statement will go as my draw on liquidity, which I'm just measuring the potential draw on liquidity, which is sell side liquidity, which is the previous day low plus the inefficiency consequent encroachment. Now, on the daily contract, today price, FOB and SMT divergence with the DXY, as the DXY did not take out the previous month high. It's just previously what I have explained earlier for you guys before diving deep. So I will take this out of the chart. The red line here is the consequent equation, which is the midpoint of this fair value gap. So I will take this out of this market currently, or let me just leave it, but I will change the view to be current interval and below. So we're going to go to the 4-hourly contract on DXY before we go to Euro. Sorry, on Euro before we go to DXY. I hope I am not mistaking these two scenario with you guys. I'm not confusing you guys with how I say it, because sometimes I eventually finding myself saying Euro when I'm supposed to say the XY. I'm saying the XY when I'm supposed to say Euro. Now, this is a potential what a 4-hourly contract. Now, I want to centralize your focus on this area, but before then, I have a statement that needs to bring you back into the whole range, right? Before we centralize our focus on that specific price, on this specific area, let's look at this whole delivery on a 4 hour because it has a lot to say. Yes, it has a lot to say because we have a high and a low. Now, a high is taken. What is going to happen? We are going for the low. Even if we don't come for the low, we might come for the midpoint. So if we take our Fibonacci and we mark these two areas out, so we have our midpoint at this area. So as long as price is on the premium price, we can look for any form of what a good PDRA that suits and what indicates a sell program to engage until we get towards this area, right? Or below this area before the momentum will reduce. So after knowing this, we can all focus on a specific price range. But let me read the statement. The Euro US dollar 4-hourly contract shows how nicely the intra-week price delivery for Thursday 16 May 2024 with a magnificent slow price delivery towards the previous month high and the previous month high and price sweep it on Euro but form a smart money divergence with the XY. Now, what I mean by that statement is if you look towards this area, this is an intraday relative price delivery for the week. But this does not mean this is the whole week price delivery. No, but there is the way an hourly candle will show a fractal structure of the daily time frame. That is how 4 hours shows a fractal, a complete what fractal structure for the uh it shows a complete fractal structure for the weekly, and the daily shows a complete what fractal structure for the monthly, and also the yearly which with weekly. So we've seen a complete fractal structure that has delivered and take a major buy side liquidity which has influenced price and might lead to a lower price delivery. Sorry, my laptop is 33%. I hope this will be enough for me to record this video and post. So I'll be kind of fast now because I have no light. So on the 4 hour, we can see that Euro now, we can now forget about all that and let's focus on this price. Yes, because this is where we are trading tomorrow. So let's focus on that. Now on the 4 hour, we can see that Euro is trailing lower after the liquidity sweep, and to factor in that day is Thursday and we are heading to Friday, which is usually a retracement into the weekly range. So we might see a little run up after the opening price and a retracement into the previous day low sales and liquidity. That is Thursday low That is the Thursday low, and it might trade into the daily fair value gap or PC consequent encroachment and respect that area for the close of the week. And we can expect next week to continue the directional bias. But forgetting about next week, let's focus on tomorrow because tomorrow is a mystery. So let's focus on tomorrow and let's uh see something that we can do. Um, since price has already, we have a fair value gap, all right, on DX on Euro, which is a 4 hourly contract fair value gap demanded with this blue line. So I want you to have your eyes on here. We sweep this buy side. Now, one of the reasons this might not be a liquidity sweep is that the 4 hour did not the body of the 4 hourly candle close above it. If at all we close on the 4 hour with a wick, all right, something like this, a long wick, something like this might be a total liquidity sweep. But on the daily time frame, it is still a wick, not a body. So, but there is conjunction there. There is a but. Okay, so if price is going to rail into this area and deliver us higher, lower, I am anticipating for price to go towards this area, which might likely not take place because uh, this fair value gap has already been traded to twice. One, two. Now, wherever price wants to rally, let it keep on rallying, but before tomorrow, because we're going to come by 7:30 because we have 7:30 Nigerian local time and 1:30 Nigerian 1:30 p.m. Nigerian local time as the two major trading hours, and we have 3:30 as the afternoon trading hours. All right, which is the three major trading hours, but I deal with two, 7:30 and 2:30. So if we come by 6 o'clock or 7 o'clock, we now mark our opening price, our New York opening price, our Nigerian opening price for today. Then we can now determine whether we're going to engage towards this area or just even from here to this low. All right, but this is a very significant area that we can look for in price. Now, with price trading close to the previous month high shows that we are in a deep premium, and even though it is going to price higher, it will need to retrace into the 50% of the range. Just like I have explained, and I use this thing to and I use the Fibonacci to explain that even though this is not a liquidity sweep, we will need to also price into the 50% of this range before we go higher. So that is it for the hourly contract, sorry, for the 4 hourly contract, and I'll go again into the hourly contract for the X for Euro. I trade Euro and I use the XY as what? The indicator. So let me talk more on Euro since I don't have time and my battery is low. Now, the Euro US dollar hourly contract illustrates perfectly and beautifully how price traded intraday, seeking both buy side liquidity and sell side liquidity. When I'm talking about intraday, so there is a buy side and a sell side intraday price that has been taken, and all responding to the previous month high. Now, the daily profile is an obvious 12 o'clock AM New York local time. Now, the hourly contract is good to illustrate about the daily profile, which is the New York local time as the high of the day, that is the opening price that continue the price delivery lower after the Nigerian local time or the Nigerian local time opening price had created a high of the day, showing how weak euro price is currently in. Now, normally on a normal trading day, we are supposed to see, on a normal trading day, we are supposed to see euro delivered. Sorry, give me a minute. On a normal trading day, we are supposed to see euro delivered lower. All right. We are supposed to see euro delivered higher to form the high of the day within New York trading hours and within the Nigerian trading hours. But that did not happen. Rather, something different happened. So we have already formed the high of the day during after the Nigerian opening price, which price did not eventually create a new high, and we just open and continue going lower. While the low of the day is formed at 10 o'clock AM New York local time, that reprice higher a little bit into the daily range and also deliver price into the 4 hourly CB, which this price delivery that form the low of the day and that deliver price into the CB. Oh, sorry, into yes, sell side imbalance, buy side inefficiency. So on the hourly contract, we can see that euro is having a sweet sell side liquidity as the previous day low, which is a potential area of sell stops, right? So now I'm just explaining how this area is a sweet area for a sell stop. And I hope this explains a whole lot. And I have tell you guys that if tomorrow we are expecting a down close candle, right, and we are expecting price to take out this low, and if we price towards this consequent encroachment before we go higher, if or we price a little bit higher and close for the week and also for the day. Now we want to see where we can engage from, but we can't precisely know that until we wake up tomorrow during our trading time and see what price has presented for us before then. So we have this imbalance that we might also retrace to, but if we retrace inside, we are going to sweep this buy side, which is a short time buy side, and also inside the fair value gap. Then we going to before that is a liquidity run before we deliver lower. So let's go to DXY. Even if I can't explain the 4 hourly contract on DXY, the hourly contract we also do. Now, on the hourly contract for DXY, we have seen that price itself creates a volume from yesterday price. There is a volume imbalance here, and we delivered into it, rally back, deliver above it, create a fair value gap, but we did not trade back to it, deliver higher. Why? Because this volume imbalance would not let price get lower into that fair value gap. Because when we trade back into that volume imbalance, we reject it, which is a good PDRA if you are following me up. So that has been the strongness in price that deliver DXY higher, and we eventually create the high of the day and rally back lower, creating a short time low and price close at this area. So we might eventually want to see this area as a sweep on liquidity, that is a run on liquidity before we go higher. Then if we run on that liquidity, the next possible area of imbalance is these two area, which is this one and this one. So our the volume imbalance. But if we take this sell side, we might not really go lower. We might just hold on to this one and price will continue going higher. So any of this that is shown tomorrow will be a good price or a good area to trade. I hope this video is insightful and you find it, you know, let me not say interesting, you find it what uh knowledgeable, or you understand my teaching and subscribe to this channel. Keep up with us. I trust you're going to do well with trading. This is how we do it. This is how I do it from my own opinion. And yeah, it is all we got to survive. There's nothing else I can do to survive apart from trading, bro. So have a nice day and see you tomorrow.